The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the Friday edition, the 12th of May, and very interesting session today. And of course, you heard our hosts going through all the different techniques that they're using for their trading and for what they're looking at and how. So we had John, we had Larry, we had Tom, and Tom Jr., and you had Daryl. So my pleasure to be here at 11 o'clock in this fourth hour. And what is very important about the session today is for my subscribers on my opening call, we were looking at yesterday of being a fairly narrow close, regardless of what happened in today, with a negative Friday. And one of the things that I kept looking at, going over charts and charts and charts the entire week, is that the more I looked, even yesterday when I went through those, what was it, about 8 or 9 Investors Business Daily top 10 stocks, almost all of them were pretty much either close to a top or it formed some kind of sharp pullback, and we're in that bounce area that forms that pattern that I call the lowercase h. So now what we've got, if you're looking at the E-mini, which is shown on my chart here, the left side, what you've got, the E-minis are down 16. The S&P is down 15 at 2,093. The Dow's down 156. The comp index is down 35 at 5,047. What's interesting, you've got Germany down. You've got let's see, I think that is Shanghai's up. Oh, that's interesting. I want to look at Shanghai because I'm expecting leg D today. Let me just see. Is that going to work out? Right there. So this is not the actual index. This is the Dow Jones index that is based on exactly the same chart formation. Yep, there it is, leg D. I'll turn the counter A, B, C, G/C in the 120-minute chart. But what's really important about this is that I would not be surprised if the Shanghai market, let me see, yep, leg D in the weekly, has a negative response to everything next week after a spectacular, how many weeks is this? After a spectacular year. Look at this, gone from the 420-ish area, 410-ish area, all the way to today's high of 715.85. That is incredible, but it is somewhat overbought, and I don't have a sell signal or anything like it yet because the MACD is strong. Stochastics are 94%, but I do believe there'll be some kind of a pullback to test the 710, sorry, not the 710, the 701 to the 690 area where the 9-period moving average of 694 is going to be very important. All right, let's go on here. So what we're looking at is a very weak response, and all the charts that I looked at said, hey, you know what? As you've been saying for quite a while, the upside is very limited, but the downside is beginning to open up in time. We don't know yet if it's going to be that response in points. What do I mean by that? Well, just as I talk about 3 chart patterns in the stock market, straight up, straight down, that's 1. Arch or inverted V, that's 2. And number 3 is a cup or a V-shaped formation. Everything else is based on that in the fractal, in the size, but the pattern never changes. So now let's look at the, we'll go straight to the IWM. Today's Friday, so it's good to go through all these different charts because we've got a weekly close coming up. The IWM, the Russell 2000, is at 125.63, down 68 cents, down 0.54%. This is probably going to be a peak E. Does that mean that it has to turn down? No, it could recycle to an E/B if there's a new, I'd have to call it new C on Monday or Tuesday. But look at you see this pattern that I'm looking at right here. Oh, that reminds me to look at a chart that I was asked about, and I didn't have a chance. Then I did have a chance, then I completely forgot to email him back. Sorry, Larry, I'll look at that. Access, I think it's called, in a moment. But the reason why I'm saying that is look at the chart pattern. These chart patterns repeat over and over. The rectangle formation tells me that a lot depends on the action of the IWM in the next 3 sessions. Why? Because if the IWM gives back the gain that was made yesterday, starting off at 124.85, the gap up opening, and in fact, we're at 125.65 right now. So we've got, let's see, so I would have to say, yeah, so if that's taken out by Tuesday, that low, that's going to suggest that you really do have the arch formation, because within the 120-minute chart, you've already had a peak E and then a peak D, which is the inside wave buy mode within the rectangle formation. So everything's set to say, yep, a very important index. Why? Because a break below 125 starts to indicate that the 124.34 9-period moving average of the weekly chart is going to be tested, and that's another thing altogether if it gets broken, especially after this rectangle formation. And the other aspect is that if it makes a new high above yesterday's high of 126.54, not only is that excellent action, but it suggests that you do have some leadership there, and you have some leadership in the IWC. Nobody ever talks about the IWC. It's the iShares of the microcap ETF. Who even looks at microcaps? Hey, they've been on fire. They've been outstanding. Even today, they're only down 0.49 when the other indexes are down almost double. So the peak E probably being made today. That makes it very important with a very strong stochastic and MACD that if there is a price movement to the downside below 80.47 over the next 3-4 sessions, that's going to be very poor. Now, what I'm looking at here, yes, in the den, I know Peaky looks at the IWC, but very few people, I'm talking about in the media, very few people talk about that. So what's really important to me, and as I say, the work that I did suggested very strongly that we've got to keep pushing, as I did for my subscribers, to the down, pushing the short side. Although we still have longs, one long has done absolutely fabulously in this environment. I'm not sure whether I shouldn't have said that until I looked. No, it's unch today. Yeah, very nice. Had a 3.5% move up, I think, yesterday. Anyway, what we're looking at here is going to the QQQ, and I'm very concerned about the Qs because they've started to stall here. Concern meaning, I don't want to make this like it's such a very big deal. It is a big deal in that you've got the responsibility of Apple, which is such a big percentage. And Apple, as I said, I just don't think Apple's going anywhere. Maybe there's tremendous support in the 125, 124, maybe even 122 area. But at this particular point, I really think that the upside for Apple is limited. Now, on the short side, if the low of 125.62 is taken out, that was the low of 4 days ago, that's going to be very negative and suggest once again we've got the arch formation. Got to watch that rising trend line to 124.17. Now, I just want to go to this chart now. Is this the chart I was looking at? Yep, there it is. So I circled this and I drawn in. This is Technical Friday. I want to do some technical stuff while I'm on the air. This is the E-mini. It was making some kind of a low as the stochastic on-balance volume MACD were turning just a short while ago, and I drawn in a yellow circle. We were right down there, and I drew that circle in, meaning that was a target. But if that target's taken out and the 9-period moving average is pierced and the stochastic goes from under 20% to 30%, it's right now 29.50, and the MACD crosses positive, you have all the signs of the potential for, this is a 5-minute E-mini chart, you have all the signs for a potential bounce, but the bounce, you're at 2,095, has tremendous resistance at 2 levels. One is the high that was made at 10 minutes past 10 at 21.01, and the other is the 200-period moving average of 21.03. But we only can go one step at a time, and the first is to see how this arch formation formed right now, as we're talking, is either pierced or the 2094 support gets taken out and you have to start all over again. I think it's going to be pierced. We're a little bit oversold from the intense selling, and we'll see exactly what happens. Get rid of this right now. Let's go back to our charts. So you got the Apple and the Qs that I was talking about because Apple is such a big percentage. Now I'd like to also go to the to gold. Now this is going to be very interesting. Gold is holding okay here on the day. It's at 1181, up 90 cents. But most importantly, you've got these arch formations. This is the smallest little arch formation that we've had in a while. I'm looking at the monthly chart and it's saying, hey, something spectacular better happen real soon to get the gold above 12, 15, 12, 19 area, and must happen really quickly. Why? Because that will suggest that we're making higher lows and higher highs. And that's going to say, hey, you can have another bounce. We saw that, I can't remember the stock we looked at yesterday, which had this A, then a B, and then an arch C, and then a pullback, and even went to a D, and even went to an E. So that's the pattern we're looking at here. But as long as the dollar, let me put the dollar in now, the dollar is down a penny, 94.97. Earlier this morning, it was all the way at 95.68 on the index, and now it's failing. But it's still not a bad pattern. Whoops, it's still not a bad pattern in terms of price. But the MACD and stochastic have started to pull back, and it really needed today to be sustained on the upside above the 95.36 9-period exponential moving average, because otherwise all you're doing is you're setting up another arch formation in the weekly chart. Okay. So those are the parameters we're looking at. Dollar needs to break that trend line now. So Monday it will be at 96.10. And the support level better not break 94.32, the low of 3 days ago, because that'll suggest that that arch formation in the weekly chart is going to kick in. And that'll make it a sharp peak B with 93.06, the 9-period moving average supporting the dollar. EUR USD, look at that. Now, this is going to be so interesting. It's holding. It isn't great, but it's holding. And it is making the arch formation, the second arch formation in the weekly. So let me just reiterate that I've been talking about for quite a while, but especially over the last 3-4 days, that I see the same thing in the bonds. I see the same thing in the dollar. I see the same thing in the euro, the USD JPY, the dollar Japanese yen currency pair. And what is it? It is the range that is forming, and it's going to be very important, because if the TLT trading at up 71 cents at 118.66 is going to make a V-shaped pattern in the TLT daily, it needs to clear by Monday, I would say Monday afternoon, Tuesday morning by 11 o'clock the latest. It needs to clear that gap down high, 120.26 instead of 118.67. That is a tall order. But it has bounced off the 200-period exponential moving average support in the weekly chart. I'm missing something. I'm missing crude oil, because crude oil is exactly the same thing. Stuck in a range. See, there's that range. And it's making the arch formation, could pull back, make a higher low, which gives the 50, it's at 60.11, gives the 57 to 56 area good support. Better not break that, because if we break 56, it's going to be a negative, and say the arch formation is rolling over one more time. So we've got a break coming up. I think I've covered all those, and now I want to go to, when we get back, I'm going to be looking at Regeneron. You remember the hat trick top I was talking about? I want to look at EXAS for Larry, and I'll be right back. Dow's down 125, S&P's down 12.5. Basil Chapman, Tiger Technicians Hour, 877-927-6648. Love to hear from you.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Basil Chapman, Tiger Technicians Hour. Dow's down 125, S&P's down 12.5, and the VIX index is up 79 cents at 1364, having hit 1402. Now, what's really interesting, from Wednesday's close into Thursday, it looked like, oh man, is this going to be yet another week that the VIX index fails and closes after looking kind of good, closes underneath the 9-period exponential moving average, that black line in the weekly chart, having just pierced that long-term downtrend line, the dash pink downtrend line? Is it possible that the MACD and stochastic, which have been building strength, is going to deflect lower? Well, all I can say is that we don't know what's going to be the close today. It looks like this bounce is going to be really important. Why? Let me just see where we are. It's still leg A, but it looks like we're starting to get to resistance at 2096 to 2098. That's going to be key if it's able to break 2098 on the E-minis. We'll see how that transpires. But if by the close, the last 40 minutes of the day, selling pressure comes back in and the VIX actually doesn't close in the 1350s or lower, but instead gets back to 14 or higher, that is going to be very important, because you've started to get a confirmation of the rounding bottom in the VIX weekly chart. This is it's happened so many times before. A close on Friday at 4 o'clock, anywhere underneath 1230, and you never know in this kind of market, would be very negative for the VIX and very positive for buying pressure in the Dow. So let's go back to our story there. I said I would look at EXAS for Larry. So the question, let me see if I can get the question. Can I find it? I'd like to find it because it was a good question. He had a great position to play. All right, good morning, Basil. EXAS, this is from the 11th. That's yesterday. EXAS, wondering if you would sell this or take some off if this gets over 28.62 to start leg F up. Does weekly look strong enough to you to hold my position long term? Thank you, Larry. Well, Larry, I did all that work yesterday and last night I checked it out, and for some reason I didn't send off the email to you. And what I was going to say is that a little bit can come off right here. I would not want to touch the core position in EXAS Sciences. I don't even know what they do. But all I can say is it's down $1.20, 27.25, what, $1.25 or something off the all-time high? No, not the all-time high, off the high. And the reason why I still liked it last night, even though I expected that you would get some kind of a pullback, is because the monthly chart at 29.97, the all-time high of December of last year, had a sharp pullback and had a V-shaped recovery. And very often those V-shaped recoveries have a chance, it's not a guarantee, but a chance of retesting the old high. So that's in the monthly. But what's really important is that the weekly was showing good tenacity in the move up this past week, up until today, that is, and was hitting that Chapman wave inside wedge resistance, which suggests that if, in fact, it's able to break above 28.80, that's not too far from here, but if it's able to do that over the next 5 trading sessions, then it could start to make a left side, right side price time match that says by the 26th of June, you could very well be testing that high of 29.97. Let me just type it in so I know what I'm talking about. 29.97 when I come back to it. Yep, 29.97. So here's my answer to you. I would take a little bit off now just because of market conditions. You've got a very nice gain, and I would consider that that's something that you might put back if EXAS comes back to the 26. Don't want to do too much. If the market continues lower, but in fact this stock is holding well, then you want to watch to see how it comes back to this area right here between 26.85 and 25.95. I don't want to touch the 9-period moving average of the weekly at 25.60. I want it to hold nicely above it, make a tiny 2-bar maximum consolidation between next week and the following week, and then I want you to push right up to, so this week was a new high, recovery a high, to 59.62, yes. So this B is over here. So that repellent line is also an attractor, it's a magnet, so we've got to watch that carefully. So take a little bit off right here. I would look to put that amount back into the stock if it can hold a point to a point and a half lower in the next week. If it starts to break 26, then call me up or send me an email, because then I might suggest taking a little bit more off. Folks, this is Basil Chapman. This is the Target Technicians Hour. We'll be looking at the XLF when we get back and the IBB. Be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're looking at the XLF. The XLF is at 25.08. It's down 7 cents. It's making a potential D. Could be CD. I'm not sure exactly because the MACD is rallying. It's at 71%, so that's not over 80%, so that makes it a little questionable. The MACD, that's the stochastic. The MACD did rally, and it's nicely above the 9-period moving average. Got a little extended yesterday. Pull back today, but it is leg D in the weekly chart. It recycled and has an inside Chapman wave buy mode ABCD, which was made at 25.20, and it's leg E in the weekly chart. And if you're looking at the BKX index, the BKX, which is the root, the core, the KBW, Keefe Brewitt Bank Index, it's in leg F, and this is recycled to an F/B in the monthly with very good price action. But the technicals are not really confirmed with stochastic, just as at 80%. That's okay. But the MACD is trying to cross positive, but it came from quite a deep pullback. So this is very important because if by the end of June, if it crosses positively, that's going to suggest I've got to call this a recycle F/B. If it deflects lower, I've got to say, hey, you're at 78.84 right now. I'm going to watch you closely because if you close underneath 73 at any point in the next 3 weeks, that's going to be very poor action. And leg E in the weekly, and that's giving me near-term parameters. It's at 78.84, just down 8 cents, of 77.85 to 77.34 support, and a breakout which would suggest it wants to test just under 80, would be if it goes 1 penny above 78.38. So at 78.39, it should go into the high 79s. I don't know if it's going to get much over 80 if it hits 80. But right now it's holding well, and the stochastic and MACD and the daily are very good. Now let's do this. We're going to look at, so the XLF has been somewhat of a leader in that anytime money is flown into the market, you've got, and I should mention for the subscribers, we do have a small long position in the XLF. Now, what's really important about this is that the stocks, almost all of them, had gone to leg D. Look, JP Morgan, leg D with a little doji candle so far today. Not a bad candle, it's only down 23 cents, but it's a leg E in the weekly. So I'm not sure what's going to take. I think what will take the bank index down further is if the TLT, oh, I didn't finish that stuff on the TLT. If the TLT rebounds, and the question was just now in the den, what about the IYR? What if you overlay the IYR? Just keep looking at the left side, the daily of the IYR. Now keep your eye on that and watch. You see the chart formation? Now look at the weekly chart in the middle. Look at that. That's the TLT weekly. Here is the IYR, which is the United States REITs as a commercial property ETF. See that? The 1-to-1 as well. It's extended a little bit more than 1-to-1. So I'm watching this carefully. And the question was, where would I be considering buying it? I would consider buying it if the 72 to 70 area starts to form a really good base over the coming weeks. And that would imply that the TLT, remember the weekly chart? Can I find it? I'll do it here. That the weekly chart of the TYX.X, and they are kind of related, the interest rates directly relate to the IYR. So now look at this. When I'm looking at the weekly chart, I'm in leg D, not I, but the TYX, the 30-year Treasury bond interest rate, went all the way, couldn't quite touch the 200-period moving average of 32.96, but it has gone. There's one arch which turned into a cup formation, okay, right there. And you've got yourself a very nice move to the right side. And let me just put a left side, right side price time match here, going from there to the plumb line. The plumb line is that vertical line that allows you to draw a vertical price point to a particular object. In this case, it's the low that was made at 22.26 the week of the 30th of January in the TYX, the 30th weekly chart of the yield. Now, new parallel, and that's going to be green right there. And to check it out, we always do a left side, right side. There you go. Look at that. Oh, that's this week. So it's just missed it. It's not going to do it today. So I want to do a left side, right side price time match. I got nothing on the left side to do it. So I have to just join the lines. And I'll join these lines right here, right there, there, and there. And it suggests that to get to that point could take me as much as to mid-July. And then I would have to draw another left side, right side price time match to that level because I wanted to match that pink dashed line. Pink dashed line right there. All right. So what we're looking at here is the 30-year T-bond yield. And what we're also looking at is the 32.96 is a 200-period exponential moving average, which should become a magnet unless there's a peak D made by the MACD turning down sharply and the histogram still expanding. So it shouldn't. And the stochastic at 77 still acting very well. That suggests that in this, and this is what I'm thinking, this is a period now where yields can go up a little further. So the IYR can go down a little bit further. And at the same time, I think that Greece is going to become way more of an issue than people kind of poo-pooing and say, oh, little old Greece, how does that bother us? Let me tell you something. At this point, we have a vulnerable market. You only need a verbal trigger point. You just need something that gets the public at some point in the next 3 weeks start to talk about Greece as a big problem for the stock market. Now, I don't know yet whether this plus is accurate. I'm taking it out. I'm putting in the up arrow, I'm saying. I'm putting in a plus because this could still be a recycle, but let's just leave it at this point that I'm still calling it a B for the TYX daily. Okay, now the question I had in the den was Amgen. AMGN. Well, Amgen is making lower lows and lower highs. It's testing the 200-period moving average of 152.85 is the biotech, big, one of the big biotech companies. And it's at 156.39, down $1.59. But what's happening is it's struggling to make lower lows and lower highs. It keeps having rebounds, but it constantly keeps going to a lower low. So that's the pattern until it changes. But it's the arch formation that has had me concerned in the weekly chart. And that says that at any point, if we take out the low of 150.85, that means if we close below 150.85 at any point in the next week or two, it suggests that you're going to make a full cup formation, and that by the first or second week of July, if it's done in the next week, you'll be testing 147.42, the low that was made back in February. So that's going to be very important for Amgen. What does it say to the upside? It says you could have a sudden spike, another spike, but it looks like you've made a peak F, potential hat trick top in the in Amgen, which takes me to Regeneron. I done a very big report for my subscribers the other day when we were right here. It was the 8th of June. It hit 544 round number high right there, and I sent out a chart that suggested that, in fact, Regeneron has the potential to make a hat trick top. What on earth is a hat trick top? Well, you know that hat trick applies 3 times, right? And what it says is that if the monthly chart is in a leg F, E, F, or G, but usually it's F, and you are it's becoming very overbought, but it hasn't given a signal, you'll need a shorter time frame to give you that signal. What is the shorter time frame? It would start off with the weekly. So the weekly said, hey, I'm also in leg F, unless I've recycled and I'm F/C. I decided I would call it just very strictly leg F for now and let it prove itself by holding somewhere in the 525 area. And I have to say, you know, it's holding so well. The MACD is good, stochastics at 91%. I think that I have to call it more C than an F in the waveform. That's how it works. So now I'm going to need the rudder of the 120, the daily chart for the weekly chart. Well, the weekly chart said, if we close down without making a new high above 544 on the 9th of June, there's a good chance that we've started a peak F top. But if we were to take out the left side lip high of 519.46 made in the 22nd of May, that's very negative, because at best you're making a head and shoulders pattern. At worst, you can go straight down. Well, lo and behold, the news comes out. The FDA approval was there, but it was very limited. Plop, the stock goes from 544, it gaps down the next day to 498. That is 50 points. It's a 10% correction in a stock that's trading in the 500s. I mean, that's big stuff. Okay? So it pulls back, closes towards the high of the day, and then yesterday it just couldn't hold that gain. There's that dashed trend line that showed the resistance. And today I can say emphatically that the weekly chart has gone from a sell signal to a sell mode based on the MACD, the stochastic, and the price closing 2 out of 3 sessions below the 9-period moving average after making a very severe peak F classic top. That says sell mode. The implication is that it should go lower, even if there are bounces, but it is really descriptive. It's like when the transports fell 20%, they went to, that was considered to be a change of trend. But it doesn't mean to say that it can't start rallying right at that point. It doesn't know that it was called something by name. It's just a descriptive thing. But the chances are, once something goes into sell mode, you might go sideways, but the chances of making a new high start to become much more difficult. If you do, then I have no choice. If there's a turnaround and that becomes the top, like a rogue wave, it just needs to finish its energy to the upside and then it's depleted. Then I put an inverted hat and I put it on top of, you get the down arrow, which is usually the top, but sometimes you get that rogue wave, and I put it in as an inverted carrot. It's like a carrot, and that could be the top itself. But the weekly chart, there's just no way that I can see Regeneron, unless the news suddenly comes out, which is unbelievable. I can't see Regeneron doing anything right now by making a new recovery high in the next week. Well, that says there's a real good chance we've made a peak F top, and the MACD is turning down, but still good. Stochastic still weighted 91%. So we might see a bounce And the bounce could take you back into the 510, 515 area, trying to fill the gap, which I don't think it's going to, of 513.73. And above that, it starts to fill in the gap. I suspect that it's just going to be I'll put it in right now. Best case will be a little bit of an arch formation. In fact, it's getting even less likely that it's got strength. It's just residual strength that we're looking at. And then it starts to come back down. And if it takes out the left side low of 490.87 in the next 3 to 4 sessions, that's very bad, because the 495 level is the 9-period moving average support in the weekly chart. So that's the weekly. Hey, wait a minute, I've got a peak F-top potential in the weekly. That says, what about the monthly? The monthly has to wait all the way to the last day of July. That is, it has to go all the way to July. The 31st is a Friday. So July the 31st, before, technically, you might have that evidence beforehand, where technically you are looking at the monthly chart, giving a confirmation of a peak that I will name peak F to start off with. But then we have to see, how do the shorter time frames work? Well, it turns out that the shorter time frame gave a perfect peak E at the 444 round number high right there at 11:30 on the 8th of June. And since then, it's gone from 544 to the intraday low this morning. What did I say? It was 490.87. All right. So that's Regeneron. And if Regeneron is about to pull back, one of the leaders in the biotech, and Amgen is not looking that great, what is the IBB doing? Well, the IBB is now down only 394. It was down 6 something. There's still enough energy in the fund managers, having been rewarded for the past 3 years. It's almost on an hourly basis that if they had a sharp decline in the morning or any time, if they bought it, the IBB, the iShares Nasdaq Biotech ETF, within hours they were rewarded. And that has gone on. Look at this chart above the 9-period moving average. Since the breakout, December of 2011, what am I talking about, 2 years, just for one very steep pullback, February of 2014. Remember, we also got that very steep one in October. There it is, October, where we did go short correctly and got, there were a lot of points to the downside. We unfortunately didn't. I thought that was going to be a deeper correction, so we held on too long and only made a little bit of money, having timed it perfectly. So we're still short, and we'll see what happens here. But the fact is, it's getting harder and harder for this pattern to break to the upside to all-time highs and then spiral into the 390, 410 area. I think that's going to have to wait. And in the meantime, we've got ourselves a pretty good-looking rectangle formation that says over the coming 3 to 6 weeks, you should be going to lower lows and lower highs. And at some point, you should be testing the 351 to 346, the candle of the week of the 15th of May. Gosh, it's not even a month ago. A month ago. So this has been very good, but I think it's starting to fade. And not only that, if you're looking at this chart, let me broaden this chart. Oh, there goes the break. Wow, time flies, huh? And this is the last show of the week because it's the Friday weekend coming up. So let me just show you the megaphone pattern, and then I'll be right back up to it. There it is. We'll talk about it.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Hi, folks. We're back, and immediately I want to go to Mohammed in Glendale, California. Hi, Mohammed. Haven't heard from you for a while. How you been?
How about yourself, Basil? Thank you. Thank you for taking my call.
Good. Yeah, it's nice. So you'd like to look at?
Pulte Holmes seems to be weakening for the past couple of months or so.
Correct.
And I was wondering do you think it's going to break that support? It seems like about 1875 or so. You think it might go into the 17 levels, or what are your thoughts on that?
So my question to you first is, do you have any position? Are you looking to get a position? Is it long? Is it short? Is this something you like, you're attracted to? What's the answer?
Yeah, at this point, I don't have any position in it.
Okay, if you don't have a position in it, I would say that Pulte Holmes, let me just do this real quickly. Lennar, I just want to look at the monthly charts. Toll. You see, you have to treat Pulte as a catch-up stock because Lennar and Toll Brothers have been leading the charge to the upside. So I'm going to do two things here. I'm going to suggest I would step aside from Pulte right now, even though it's acting quite nicely over the last three sessions. I'm a little concerned because the monthly chart is setting, by now, for the folks who know my techniques, you'll know that I immediately grabbed the top bar of the monthly back at the high of 2013, grabbed the low of, I think it was just about, was it July or what was that? It was August at 14.23. We got the high of May at 24.47 exactly, 1 year ago. And now what we're looking at is the rectangle formation is formed, and invariably I will be drawing in, I'd expect a D, and it almost made the D. And now I would be expecting at the same time that it failed near the top, and now you are working your way towards the bottom. So let me do this. I'm looking at a monthly chart because I know you're looking at the longer term. My suggestion is, because I'm very nervous about this market, I think that we're in for a very deep surprise to the downside, and I think it's going to come from Greece, although that's just the trigger for something that we've been anticipating for a while. I'm going to suggest, if you've got patience, I don't think you're going to miss out more than a point or so to the upside. But if I'm wrong, if I'm right, there should be a test for Pulte, and the big test will be a trend line support in the monthly at about $18. That's just a point and a quarter away. If it takes that out, I'm going to suggest to you that you hold off on Pulte Homes, even though I know that they've turned the corner in many aspects. But I'm looking at the chart, and the chart says, hey, they might have turned the corner, but for the past couple of months, they're not doing well at all. So give this a little bit of time, and then if it breaks that support, and the next 3 weeks it's trading closer to the low of October, near the 1656 level, give me a call and we'll look at it again. And I hope you don't mind when you call me that I turn around and I say, you know what, I would prefer to look at the leaders rather than Pulte Homes. I might suggest, if Pulte is looking good, that you actually buy the Lennar or Toll Brothers. But let's wait. So I'm recommending to you, you might want to nibble here. You could get a point or so, but everything about it says, based on the weekly chart, that we should, and the monthly, that we should be coming back to test the low that was made at 18.61 this week. And if we take it out, then you got to watch that trend line. I hope that helps you, Mohammed.
Yes, it does. Thank you so much, Basil. Have a nice weekend.
Thank you for calling in. Congratulations on having patience there. So, folks, we're about to go to Nico and Paige. Stay tuned. There's just great programming here at TFNN going on all afternoon. You've got let's see, what do we have? We had Daryl. Okay, so we've got Nico, and then we've got repeat. Then we've got you've got Steve Rhodes back in the market there at 1 o'clock. You've got Dave White at 2. You've got Tom O'Brien, and then Tom O'Brien and Dave White. Hey, programming all the way through to lead you into the weekend. And I'm going to also say, check out my opening call. This is a great weekend to do. I'm going to try again like I did last week to give a lot of charts. Now it's going to be a little bit more specific on charts that I think are deteriorating and charts that are really working. And I'm going to do a lot of work on the financials as well. So have a great weekend. Check out my opening call, 2 weeks free. And this is a great time to get it. I'll be back on Monday. Have a wonderful weekend.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.